Hey guys, so in this video we're going to be talking about why price moves and what moves price. And the reality is there's only one thing that moves price. A lot of people think about it as news and fundamentals, but in reality those are just catalysts. What actually moves price is the simple rules of supply and demand. See, when we have a lot of supply and too many people are trying to sell, this is what causes price to fall. This is our selling pressure. And when we have not enough supply and people are willing to buy, or more people are buying, price begins to rise. So why does price move? And the reality is, as traders, it doesn't matter. The only thing that matters is what price is actually doing. This is the only information that we can profit off of. So trying to pay attention to anything else is irrelevant. You know, you want to be on the right side of the trend and go with the flow, not fight it. The trend is your friend. So this doesn't mean fundamentals aren't important. It simply means humans are inherently irrational. And if price is moving up despite weak fundamentals, you don't want to be on the wrong side of that trade just because it shouldn't be moving up. Because the only thing that matters is what is actually happening. It's the only way we can profit in the markets. If you're trying to fight what is happening, you're not making money. So this is just Tesla over the past year, and many analysts have said that Tesla's fundamentals do not back up this rally. Many analysts have missed out on a 300% in the course of less than 5 months. Tesla's increased 300% in value. I mean, they missed out on such an amazing profit opportunity. So when price moves, it's just best to accept one thing. And the sooner you learn to accept this and get on the right side of the trend, the sooner you will be profitable in your trading. And that thing is, the market is always right. All we try to do is be on the same side as it and not fight it, because it is going to do what it's going to do, whether you like it or not. So when we're looking at this Tesla chart, you know, how could we have prepared ourselves for this highly profitable opportunity? And as technical traders, we look at a few things. So we use historical data to help us determine where price has been going and determine when to get in and out of our trades. You know, we use many different tools to help us map the momentum created by patterns in the market, to anticipate future support and resistance levels and get signals for entry and exit. In this video, we're just going to stick to the basics. So, you know, the tools of the technical trader are support and resistance, our price channels. We look at patterns. Now, support and resistance. Support is simply an area on a chart where supply runs low and it causes price to rise. Resistance is an area on a chart where supply is high, which causes price to fall. Simple, right? Supply and demand. So let's take a look at Tesla again. And on this chart, I marked some resistance levels. As it was moving up, Tesla had some resistance. And when resistance breaks and becomes support, that's usually a good time to go long for the next bullish move. And you can see when these resistance levels broke and acted as support, price started moving up. And the opposite is true. When support breaks and it becomes resistance, that's usually a good time to go short for the next bearish move. And you can see on this chart, you know, when these support levels break and they start acting as resistance, price moves down to the next level. Now, we don't just look at support and resistance because there's a few different types of support and resistance. We have price levels, and we have price channels, because price channels show us where price has been going over a period of time, depending on what time frame you're looking at. And they're illustrated by drawing two parallel trend lines, whether it's a horizontal trend, an ascending trend, or a descending trend. These price channels show us areas on a chart where we can expect price to reverse based on its past performance. So like I said, we can have channels that move us up, we can have channels that move us down, and we can have channels that kind of move just sideways. Now maybe you might call this support and resistance, you might see it a different way, and I would not argue with you. But channels can move three different directions, and that's what we want to focus on. We also have our patterns. Our patterns are used to identify future bullish and bearish moves before they happen. And there are many, many different types of patterns that people look for. But some really important ones that I want you guys to focus on are bull flags and bear flags, head and shoulders, and cup and handles. Now, we have those bull flags and bear flags. So it's also important to note that we have inverted head and shoulders and inverted cup and handle. So this is an upside down head and shoulders and an upside down cup and handle. So our bull flag looks a little like this. We have price rise, consolidate, and then it continues its next leg up. Our bear flags look a little bit like this. The dashed lines I'm showing you are just simply, the continuation of the move. After the original move down, the consolidation, and then you have the continuation. We also have our head and shoulders. And like I said, we can also see these head and shoulders when they're inverted. You can see it upside down, showing a move back to the upside. And lastly, we have the cup and handle, another pattern that we often look for. And again, these can be inverted as well. So if you found this very informative, I highly suggest you check out my other videos where I show you how I do these things. I look for support and resistance, I look for channels, and I even look for patterns. Thank you guys for checking out the video.